Hello there and welcome to FX Street Currencies in Play, brought to you by Royal Financial Trading, where I'm joined by Mark Oswald, the strategist at ADM Investor Services. How are you today, Mark?
I'm very well, thank you.
We're all revved up for this afternoon's economic data from the US. You're hoping for a big number just to set the cat amongst the pigeons, possibly?
Yes, I think everyone's been focusing on how much better the Eurozone's doing, even if the inflation data really still isn't picking up. But I think there's been a lot of skepticism about how much of a rebound there's going to be in the US. The consensus looks for 2.7. I think quite a few people were revising their forecasts up yesterday. There are calls out there for about 3.5%. I think anything which came in above 3.5% would probably upset this, the only way for the dollar is down mentality or rut that we seem to have got into, and the only way for the euro is up. That's not saying that the European GDP data that we've had today hasn't been very impressive. It has. But it's about this sort of sea of negativity surrounding the US because of all the failures in terms of Mr. Trump and enabling any of his legislation, and people looking at the US inflation outlook and saying, well, the Fed can't really do much in the way of further policy tightening. So a strong number would definitely upset the apple cart, particularly if it were accompanied by an employment cost index which was above the expected plus 0.6, particularly if that showed any sign of a particular pickup in wages.
So something to sort of shake us out of our summer
lethargy.
Yes, lethargy. Yes, exactly. Okay, well, let's have a look at the headlines today. We've got the dollar index against a basket of six major currencies was flat at 93.87 after edging up 0.2% the previous day. Dollar index, is that something you look at a lot?
Yes. I mean, the problem with the dollar index is its structure, that it's got a very heavy weighting of euro. So a lot of the time, really, you're looking at just another version of dollar euro. Yeah. But the trend has been resolutely down for quite some time. We had a bit of a recovery yesterday on the back of the durable goods data and above all the trade data. But I still think the mentality for a lot of people is sell the rally because they just don't actually believe that things are particularly well placed around the US economy, particularly relative to what's going on elsewhere. However, I can't help but feel that I look at the interest rate differentials between the dollar and the euro, dollar and sterling, dollar and Swiss franc, dollar and yen above all. And you can't help but feel at some stage those have got to start attracting some investors back into the US.
But here, I mean, it's just clear. I mean, it's just new. As soon as the year started,
yep,
the Trumpflation trade that died on
blew
the dollar.
Up. Yeah. Yes, exactly. I mean, you've got the Trumpflation trade and then the Trump dump, so to speak. Yeah. And it's really been all about that. But now we're actually below the levels that we were back in September last year.
Right. Clearly, that's not seen as being a leading indicator on what the stock market might do yet.
Well, to a certain extent, it's always been the sort of view that at the moment we've got this view that euros stocks are a sell because the euro is strong. The corollary of that is US stocks are a buy because the dollar's weak. It is a quite simplistic way of looking at things, but it's always been a popular one.
Okay, dollar Swiss set for biggest weekly drop in nearly 2 years. It's a mirror image, obviously, of the other currencies. Aussie dollar held at the near 2-year peaks on Friday, having reached 80.66 yesterday, the highest since May 2015. And I suppose it's difficult to overemphasize how much these movements have caught people out over the last few weeks.
Oh, absolutely. I mean, the Aussie dollar has been a popular trade simply because we've had a bit of a recovery in a lot of commodity markets, led amongst other things by oil and copper. But you keep on getting tripped up by the Reserve Bank of Australia, which keeps on saying, no, as much as we like the way the labour market's going, we like the way that GDP is picking up, we have absolutely no intention of hiking rates anytime soon. And that then trips it up.
Okay, we'll just have a quick look at that chart just to remind us the glory of the recent move. So, I mean, I think people were looking for 80 to provide some kind of block, but obviously it hasn't done that either.
Nope.
We look quite settled around these levels for now.
Yes, for the time being. I think where you really do need to give it that extra strong push through 80, so it establishes 80 as a base, you are going to need the Reserve Bank of Australia to start signalling. Yeah, there is obviously an attractive carry in the Australian dollar, 1.5% relative to what you're getting, say, in Europe. and indeed Japan, where the Aussie dollar is a popular currency to buy for carry. But you now need to have this idea that the Australian interest rates are actually going to be picking up. At the moment, that's not really the case.
Okay, and euro dollar topped levels at which it began trading in 1999, hitting a 2.5-year high. I suppose that reminds us how overvalued the currency really was or is.
Well, I suppose there's two ways of looking at it. From a long-term view, the euro probably still is undervalued. Your problematic now is that everyone's so long of euros. We've got I think it's a 7-year high in terms of the IMM commitment of traders data, which we'll obviously get an update on later. And it's the speed at which it's moved higher. So there's a vulnerability to for a correction here, which could, I suppose, go down as far as 114 if you trip people up in this environment, given a lot of people appear to think that the euro is a one-way bet higher.
Right, okay, well, we'll see how that's a monthly view there. So you can see that it's, I suppose, really halfway through the range there at the moment, but we'll see if it can recover from that. Trade of the day, Aussie dollar steady following a slide from a 2-year high. Aussie dollars trades at 79.70 after touching 80.66 yesterday, as we've said. Up 0.7% on the week. Long at 78.90. Stop loss 78.30. Risk to reward 1.52. I suppose we're looking for a blip to the downside to buy into on this afternoon.
Yes, I guess people would want to see hope for a slightly weaker US number that encourages a bit more, or rather a stronger US number, which would encourage that down dip in the Australian dollar for people to buy into on the back of.
Okay, we're going on to the trading positions. Retail, banks, institutions, still pretty long of euro dollar, really long, I suppose, of pound dollar. At this point?
Yes, very long. In fact, a noticeable thing there is how quite a lot of them are neutrals. And then there are these much more extreme positions, obviously euro sterling, cable, sterling yen.
And I suppose dollar Canadian, worth a mention?
Yes, dollar Canadian, definitely. I mean, we've been powering through. And the data, we've also got important data out of Canada today. They've got their monthly GDP data, expected to be reasonable at 0.2%. A stronger number will probably just give an extra leg to the Canadian dollar, particularly as it's being also helped by the fact that we've got the oil prices recovering, and for want of anything else, it quite often trades on the back of stronger oil prices.
So a bit of a rocky ride around this low from the other.
Yes, I mean, you look at that chart and you go, well, however stretched does it need to get before we have a meaningful correction? Because there really hasn't been a meaningful correction. And that's, I suppose, the big risk with this particular one, that there hasn't been a proper correction. And if you were to even look at a 38.2 or a 50% retracement, that's really quite a sharp move.
But we got sort of a payback there a positive payback for traders in terms of that 1-year chop, which was just horrible going in towards the 135 zone, which was, I wouldn't say untradeable, but it really was rather nasty. And then all of a sudden right down again.
All of a sudden.
I mean, corrective, it was a corrective move, horrible corrective move.
Yes, very, very ugly, and certainly a classic example of how how people being caught long and wrong suddenly turns into a momentum trade.
Okay, let's just go for the finish off with the euro sterling, where people are apparently long up to the eyeballs of this, betting, I suppose, on 90 being breached.
I assume that's what the assumption is here, but the momentum does seem to be gradually petering out on that move, to my way of thinking. Particularly if you look at that congestion that we've got back from the end of last year in that area, you're going to need something to really power it through that 90 level on a sustained basis.
So some political mishap, let's say.
Yes, that would be probably the most obvious one, because that's the thing which tends to catch people offside. It's not something predictable like an inflation number or an unemployment number or a GDP number, which people can see coming, and if it comes down in line, there's no incentive really to trade much other than very short-term intraday trades.
Prime Minister Davis turning up or something like that.
Well, that would certainly, yes.
Okay, let's have a look at the calendar. Don't want to cheer him up too much.
No.
Right, so consumer price index GDP, as we mentioned, in Canada, as you also alluded to, GDP for May, and Baker Hughes rig count and Kashkari speaking in the evening. Highlight there for you?
It probably is Kashkari. I mean, the GDP data we've already been through, so that's obviously the highlight of the day, and that's going to be the dictator. But Kashkari's speech is interesting because he is with the market in being sceptical about the inflation outlook. So he's going to sound dovish, no doubt about it, which would reinforce the market view. However, he's not that dovish that he actually is against the idea of balance sheet reduction. He is actually for balance sheet reduction, which is, I think, a point that everyone needs to remind themselves that even the biggest dove on the committee may occasionally sound hawkish in certain other aspects.
Mark Oswald, strategist at ADM Investor Services. Thank you very much for coming in today. That's it for the FX Street Currencies in Play, brought to you by Royal Financial Trading.